Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about TTK Healthcare, whether it's a buy at these levels or an avoid. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about TTK Healthcare, I have one request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And if you pay $100 upfront, you get 1 year access. That means you get a 20% discount. For detailed market or company talk or number of stocks you are holding, you can directly email me and we can work things out. Now about the company. Established in 1958, TTK Healthcare provides medical solutions across the board as well as consumer products. So they have a number of products which cater to the medical facilities, medical domain, and also they provide a lot of medical solutions, equipments, etc. Instruments, medical instruments is also there. They have a plethora of home care products as well, which people can use at home. A number of personal care products under brand name of Eva, like talc powder, deodorants, lip balm, etc., is also from TTK Healthcare. The market cap of the company has risen to 1000 crores and the stock has done well in the recent time. If you look at the financials, then these are Q4 FY21 numbers versus last year. So sales went up by 40%, and they had a PAT of around 10 crores versus a flat performance last year. So that is appreciable. Company has low debt. There's high promoter and institutional holding with only 13% free float. So looking at the numbers, all look pretty fine, and things look pretty chirpy, and that's why the stock has also done well. But the bone of contention has been the return ratios and margins, which are either in mid-teens or in lower single digit or in mid single digit. So 8% operating profit margin and around 14% of ROE is not that great that you would really love to just buy big into any company. If you look at the performance, then a stock has been in downtrend for the last 5 years. It has done virtually nothing. By March 2020, it had fallen around 80% from the peak of 2017 December. But it has recovered more than 120 130% from those lows of 330 320, and currently, I mean, from 330 340, it has risen all the way to 780, and then is probably consolidating. So it has been a tremendous recovery from those lows in March of 2020. See, numbers up till now has not been that great. That's what I'm saying. There are other companies in the pharmaceutical space, in the healthcare space, which are doing exceedingly well. You look at path lab companies, you look at hospital companies, and you look at pharmaceutical companies, all the mid-cap pharma names, API names, etc. In that regard, TTK Healthcare falls behind, but individually speaking, for the company, the last quarter has been good, and if the first quarter of this year, that is the June quarter, turns out to be pretty good, then we could definitely look at the company towards investment. So there has to be a 2-3 quarter growth, that we need to see a sustainable growth, a performance which is consistent, and then probably we can look at probably buying into the stock. So market share may be getting taken away. That is what I see with the margins going away. We have to see how the next 2 quarters go like, because a lot of companies have got into this medical domain over the last 2 years. A lot of unrelated companies have got in there, so the margins must have shrunk, and most of the people who have just an semblance of anything that relates to medicines or medication or anything related to equipments, they are getting into it because they know that over the next couple of years there could be a lot of money that could be made through putting money into the medical facilities or providing medical equipments, etc. So in that regard, I think the competition is going to be stiff, and higher expenses is also eating into the margins, and that the company has to take into effect. Now with higher steel prices, higher metal prices, the equipment prices has to go up, and if they don't pass on that you can say elevated prices to the consumers, it would be extremely difficult for them to sustain. So all things together, it doesn't look like that is going to be all the rosy picture going forward. All three segments require heavy investments and particular attention from the management. That is also something to be looked upon. There are other companies that are getting into the domain and doing well, which are unlisted but yet becoming larger companies in their own respect. If you look at the technicals of the stock, then there is strong long-term support around the 600 610 level. So any dip towards 600 could be a very good opportunity to buy. Short-term support lies around 680. See, I don't think it will run in a hurry from here on in. It has already gone up from 500 odd to 800. It has already risen by 50-60% over the last probably a month or so. In just a month and a half, it has gone up by 40 to 50%. It cannot be traded because that is what the stock does. It goes up for a little while and then just consolidates. It's a very comparatively illiquid stock, and that's why it's very difficult to trade. Big up move is expected above 800, where we can see 980 and even 1280 going forward. But at the moment, probably on declines to 600 would be a decent buy, even 620 630. So wait for a certain amount of decline, at least a 10% fall from current levels, to accumulate the stock. So what needs to be done? In my opinion, you can buy only if margins improve. In my opinion, if you are looking at a long-term scenario, then there are many other companies in which the margins are very good, in which the profitability growth has been 30-40%, northwards of 20%, at least 20-25%, sales growth in the similar level, and net profit margins of around 30%, 25%. Even in the diagnostic domain, there are smaller companies, there are mid-cap companies which are producing such numbers. Taking that into consideration, taking all that into consideration, I would prefer those companies or API companies on declines, on consolidation. So we have talked about Laurus, Newland, and there are other companies which are in the API domain. There are many others, so I'm not saying that or suggesting that those two companies are good. So you need to look at beyond this. Although TTK Healthcare in its own respect has done well and may continue to do well, so the stock price may continue to rise, but there are other companies in which consistent growths are possible, other companies in other sectors as well. But if you have it, then hold and keep track of numbers. There's no reason why to sell that. You must be having it at 500 600 rupees, even at 700 rupees or so. I think once this crosses 800, you could see even 1200 on it in a year and a half time, the time it crosses 800. So have a 3-year view from here. There are other options in consumption, but if you want to hold on to it, have a 2-3 year view and you will make money in the stock. So this was my video on TTK Healthcare. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.